morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Moody's Investor Service has joined a slew of agencies that have trimmed their growth forecast for the Philippines, saying the health crisis remains an acute challenge for the economy. The Debt Watcher now expects domestic GDP to grow by 5.8% this year. That's much lower than the 7% forecast it gave in January. Moody's new outlook is also lower than the government's revised full-year target of 6 to 7%. Moody says the degree and pace of recovery are subject to uncertainties related to the COVID-19 pandemic as well as the progress of the vaccine rollout. Meanwhile, Finance Chief Sonny Dominguez told Bloomberg that economic managers are expecting pretty good second quarter GDP figures, citing easing unemployment. NEDA Chief Carl Chua also hopes for a better growth in the second quarter on the back of improvement in the areas of trade, manufacturing, and mobility. More vaccine supplies are arriving in the country. That's as the government scrambles to prevent another surge in cases due to the Delta variant. Over 560,000 doses of Pfizer vaccines arrived last night, followed by 1.5 million doses of Sinovac this morning. With this latest batch of shipments, the country has already received a total of almost 30 million COVID-19 vaccines of different brands. And based on the government's data, 5 million Filipinos are already fully vaccinated. For the Octa research team, however, this may not be enough to avert the spread of the Delta variant. In fact, Octa research member Guido David told 1PH sa Totoo Lang that the rising infections in the country may spark another surge. David projected that we might see 8,000 new cases logged today before reaching a 10,000 daily average by next week. Okay, guys, it's a truly stressful time for our markets with dreams of that herd immunity bull run bursting. You can see on my terminal here, however, a bit of positivity. This, of course, after yesterday we had sank quite a hefty amount, 1.7% down below 6,500 levels. That U-shaped curve here, it does seem to be recovering and bouncing back. We are up by 0.7%. However, we did have some analysts on our show saying that we might be testing the 6,100 levels. Nevertheless, there is one sector that is clearly in focus today. Let's take a look at the banks. You can see the financial sector staging a rebound. Metro Bank and BDO, which were the two of the biggest hit banks, not just banks, but the equities in the markets yesterday. Recall BDO fell at least 4% together with Metro Bank after Fitch had cut their credit ratings outlook to negative from stable. Apart from that, you also had PNB closing 1.7% lower. But one is going to be in focus today. It's the first of the big companies reporting their second quarter earnings, and that's starting to pour in. You can see on your screens here, BPI's second quarter net income is up by 28.8% to the tune of 6.8 billion pesos. Now, they say that this comes due to the lower provisions which they had booked in the second quarter of the year. Nevertheless, if you do look at the revenues, still down in the first half of the year compared to 2020, that's down by 6.7%, and that leads to a net income which is down by 1.2% to 11.8 billion pesos. They are saying, however, that in terms of provisions, that went down by 56% in the first half, and their NPL ratio is at 2.94%. Markets are digesting that right now, and it does seem that they are happy. BPI up by 0.8% as of 4 minutes into trade to 84 pesos and 95 centavos. Now, of course, all of this news comes as banks there's now this Bangko Sentral ng Pilipinas Banking Sector Outlook Survey, and they are saying that banks are seeing their bad loan ratio to be over 5% in the next 2 years. Now, very interestingly, it does not seem to be dragging the banks down even further than yesterday. Perhaps they were already so hard hit. But nevertheless, this new survey, which is an outlook survey in first quarter, is saying that the NPL ratio forecast is accompanied by greater prudence in credit risk management, with more lenders intending to report an NPL coverage ratio of more than 50 to 100%. Another good thing about this report is that they're saying that the banks are expecting double-digit growth in assets, loans, investments, deposits, and even net income in the next 2 years. This also comes as in that same interview of Sec Dominguez for Bloomberg Television, he did mention that banks still have room to cut the BSP still has room to cut the triple R, or the reserve requirement ratio, as the economy recovers from the pandemic. He says it is still high at 12% and will be putting downward pressure on the interest rate. So something to continue to be watching out for here. Banks recovering this morning, but still very, very much in focus. Meanwhile, let's check in on the biggest headlines we're keeping our eyes on. Trade Secretary Mon Lopez warns that MSMEs could no longer handle another massive lockdown. Now, speaking with One News' The Chiefs, Lopez said many small businesses are still reeling from the effects of previous lockdowns. That is despite the recent careful reopening of businesses implemented in a bid to stimulate the economy. However, Lopez emphasized that the threat of the more transmissible Delta variant cannot be ignored. And that is why the interagency task force will still try to maintain granular lockdowns as an immediate response in the case of a surge. Now, the Finance Department is reviewing a BIR regulation imposing a 12% VAT on previously exempt raw materials and packaging supplies sold by local manufacturers to exporters. Finance Chief Sonny Dominguez told financial executives that the law is, quote, not very fair, so they will review it. Dominguez said the review should be completed before the month ends. PEZA Director General Charito Plaza had also asked the BIR to defer the effectivity of the regulation while the review is ongoing. The BIR earlier defended the regulation, saying it was in compliance with the trade law, which mandates the agency to impose the 12% VAT once a refund system is in place. But exporters argued that the issuance conflicts with certain provisions under the newly created law, which retained the zero tax rate for exporters. With all the bad news weighing our domestic markets, there may be a silver lining in terms of structural reforms. And here to share with us how the Create Law can help drive growth, we have with us Dom Frederick Andaya, Colliers Philippines Tenant Representation Director. Good morning, Sir Dom, and welcome to the broadcast.
Good morning, Danie, and good day to everybody.
Sir, we're talking about the Create Law and how important this actually is in a time of pandemic. This was, something that they finally managed to sign into law. A lot of contentions, a lot of provisions taken out. Give us, in a nutshell, how this bodes well, specifically for the property space.
Okay, so after a lot of years of this tax reform being discussed, it was finally passed. No, so that's eliminated. That eliminated already the uncertainty with regard to the tax regime of the country, and it also is meant to help the country recover by immediately reducing the corporate income tax, which is retroactively effective July 1 of 2020. So from 30 to 20%. And also, one of the thrusts of this law is to improve the countryside. So, investments that will go outside of the National Capital Region and even the immediate vicinity of the Capital Region will be given more income tax holidays. So from 4 years in the National Capital Region, it will increase to 5, 6, and 7 years in other areas.
Sir, you mentioned growth in provincial locations. Which one specifically? Is there going to be, general movement from NCR towards provincial locations, or is it specific to certain sectors? Certain types of businesses, domestic versus international, and again, certain, subject to the province itself. Are they actually ready to absorb all of these companies?
Yeah, I think what's going to dictate the movement to specific locations would be the readiness of the different locations in terms of infrastructure, the business and general business environment, and the availability of talent pools. So, having said that, I think what the centralization will be from Metro Manila towards the adjacent provinces and eventually to other locations farther away from the cities.
Sir, which locations are you specifically excited for, and which companies as well are standing to benefit from this trend?
Okay, so first off would be the Greater Metro Manila locations like Cavite, Laguna, Batangas in the south, and then Bulacan, Pampanga, Tarlac as far as Pangasinan in the north. And then the BPOs, of course, they've started looking at these locations already, or some of them have established location operations already in these locations. And then in other cities like Cebu and even Davao, Bacolod, so the adjacent provinces or locations within these metropolitan areas would be the beneficiaries of this create law.
Do we have enough PEZA zones basically in these provinces compared to NCR? And is there enough incentive now for the PEZA locators to actually be shifting?
Yeah, that remains to be a challenge, particularly with the BPO sector, because the BPOs would still gravitate towards registering with PEZA because of, number one, familiarity with the agency. And of course, PEZA is still one of the most trusted government agencies. So we believe that in the next several years, BPOs would still register with them. So yeah, it remains to be a challenge, and we urge the government to look at proclaiming IT centers and IT buildings in the locations that we feel would be attractive to these BPO companies.
Okay, so not enough yet when it comes to PEZA in other areas outside of NCR. Sir, what about the impact of the pandemic in terms of locators, specifically foreigners that are investing here and are having their outsourcing operations? Some have mentioned that because of the cut in incentives for a lot of these foreign locators, this might encourage them to go to other places like Vietnam. Are you seeing this happen because of the create law, or are they actually still staying here?
Yeah, the bottom line is the total cost of doing business in the country. And we feel that with the create laws provision that reduces the corporate income tax from 30 to 20% or 25%, that puts the country or the Philippines at least close to our competitors in the ASEAN region in terms of the corporate income tax. And we may not be the cheapest. And with the current business environment, there may be reasons for other locators to move out. But at least for Create, it provided for a 10-year transition period, which is, I think, enough for them to stay put given the uncertainties in the market, and then assess eventually if doing business in the country is still beneficial for them. And I think if we recover from this pandemic, they will see the benefits of still operating in the country with a better business environment, better infrastructure, and the availability of talent.
Okay, so you're saying that there's still, this 10-year window for them to actually adjust due to the pandemic. Sir, you mentioned in the Businessworld article that you are awaiting the release of the Strategic Investment Priority Plan. What is this all about? How much of a boost will this be for economic zones, and what are you hoping to see in this plan?
Yes, so the SIPP is provided for under the CREATE also because it depends. The CREATE law depends on the SIPP in terms of the specific industries that will be given priority. So under CREATE, it provided for the different three industry tiers, and it's up to the SIPP to define which specific sectors fall under the different categories of the industries. And of course, with the categories come the various kinds of tax incentives. So if the SIPP will be passed soon, then that's going to give more clarity to investors, especially foreign investors, on what industries they can do in the Philippines, and at the same time avail of the tax incentives under CREATE.
Sir, do you have a timeline on when you expect this might be happening, coming online? What is the market expecting here? And also, how soon is this, tax income holiday gonna be implemented? Is that as soon as they relocate, as soon as they buy? It takes so much time for them to actually be relocating.
So the SIPP, I've read in the news that it has been finalized. So I think it's undergoing final review probably. So that's gonna be out soon. And then the tax incentives are made effective by CREATE as retroactively to July 1, 2020. So it's already in effect.
Okay, so it's actually something that we're just waiting for to come out, but should already be in the hands of the lawmakers. And finally, sir, before we let you go, just short term here, the impact of the Delta variant on the lockdowns, on the tenancy rates of these companies. Every time we've had a lockdown, were you seeing the BPO sector really take a hit, or have they been actually resilient, and you are confident that they will be able to weather this new storm of Delta variant?
Yeah, I mean, our experience is not so different from the other countries, right? So if there's going to be a lockdown, that's going to have a big impact in terms of the recovery period. So we've seen in terms of the impact of the Q1 surge, we've seen transactions decline from 137,000 square meters of transactions in the first quarter. The recorded I'm referring to office transactions in Metro Manila. From 137,000, the transactions declined to 84,000 square meters. So the lockdowns would have an impact in terms of the decision making of BPO companies. It will be delayed further given the uncertainties. But with respect to the resiliency of the BPOs, I think they have adjusted in terms of their operations, doing a mix of work from home and work in the office. So they've said also that productivity is not compromised. That's why they're also asking the government to extend the work from home limit, which is due to expire by September 12. And I think given the risk of the pandemic, which is still persisting, that has to be given a thought by the government for them to continue operating on a work from home basis.
So it's not something, of course, that we want to happen again. It definitely is something we cannot afford. Even the BPO sector, which has been resilient, would not want another lockdown. Thank you so much for those insights. That was Tom Frederick Andaya, Colliers Philippines Tenant Representation Director.
Thank you.
And that's a first look into the business day. Today is Thursday, July 22, 2021. Catch Businessworld live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.